glasses. Do you need reading glasses? Yes.
I don't. Yeah, I do, but I refuse to wear them on air. All right, everybody, we're live. Let's get going. This is the Commercial Real Estate News and Views morning show that happens every week, and we are live on YouTube. It's just so awesome. And I have my esteemed panel of guests that are here, and Deanie's having audio issues, so hopefully he'll come back in. And then we'll have some other folks hop in here in a little bit when they can juggle their schedules. But it's going to be a great day. It's, the Fed's about to do their announcement. We're all like, that's what everybody's talking about. We were talking about it last week. We were talking about the week before. Now it's the day before. So, that's everybody. So any other news in what we've been talking about that everybody's feeling, everybody's thinking is still going to be a quarter point? Is that the crystal ball lately?
Well, I mean, Elizabeth Warren wants them to do 75 basis points. I don't know if you saw that the letter that she sent yesterday.
No, I didn't. Well,
Yeah, I think it's 25. Even with today's retail sales numbers that came out stronger than expected, I mean, the market's baked in 25. I just don't know any other way to spin it.
Yeah, no, I feel you. It would be interesting to see if they did anything else for sure. So the jobs numbers came in kind of where they were thinking it was going to come in, right? They didn't do much else. So I think it's pretty much an interesting time for sure to see what happens.
And Amy, I just wanted to discuss one more thing. It's not the announcement at 2:00 that matters. It's the press conference at 2:30 that really has the importance, because it's what does Powell say, what doesn't he say, and then, call it option 3. What's the message between the lines of what is being said? So now, today was the most important retail sales data since last month. Tomorrow's the most important Fed meeting since last month. And then as soon as tomorrow's done, I mean, people are going to start hitting the fast forward button saying, all right, what's coming in October? We get another 25 basis points in October. Forget the fact that we have an election just a few weeks later. I think everybody is just so keen on what this message is that's coming out in the press conference tomorrow.
Keep going. You're good. Sorry. Are you there?
I'm here.
There's a lot going on for all of you in the next few months. It's crazy.
Yeah, for sure. What do we see is we have just a mountain of, it's towards the end. It's not just the Fed announcements. And we have a lot of other announcements that come predominantly towards the fourth quarter of the year. And then we have the election and we have all these other things that we're kind of waiting and hoping for too, that kind of impact everything. Right.
But the outlook for retail is very positive, right? I mean, generally very positive for retail, much more positive than what they had predicted a year ago, I would say. Are you finding that, David? From a Canadian perspective, I mean, certainly smaller, but I think it's positive. It's a positive outlook.
Yeah, we just had CoStar came out with some data last week, just highlighting, frankly, the lack of retail space availability that's out there. That they've noticed that obviously, if you're on the hunt for retail space, your options are getting less and less, unless you want to start taking a step down, let's say in terms of asset class. But for those strong base tenants that are out there, they are not having an issue, it seems.
Yeah. No.
Now, but to hit the fast forward button, as you just kind of mentioned, Maria, with holidays obviously not too far off in the distant future, and I mean, our local Walmarts and stores are already starting to transition towards holiday inventory and decorations and what have you. I think the key thing to focus on is going to look at what kind of deals are out there this year compared to last year. What is, remember the whole Black Friday, the day after Thanksgiving, all that stuff, at least here for us in the States. what's going to incentivize that retail consumer if we're having issues with the economy, if there is a recession, if the consumer isn't spending as much as people are making it out to be? What are these retailers going to do to entice those consumers to come to their stores, whether it's October, November after Black Friday or going into Christmas? I think that's going to be something really interesting. Forget the fact that the space is available. It's how you're going to get the people to your stores over the next couple of months.
Yeah, for sure. And it hasn't on, I mean, obviously everybody looks at Black Friday and Cyber Monday and to kind of determine what's going to happen in the fourth quarter of the year. And I just, but retail overall has held steady. So it's actually doing fairly well. So I don't know where the people are getting all this money. I don't know, because I go to fill up my gas tank and it's like damn expensive. That's all I have to say.
Wait, Amy, you're based not too far away from where I am. I drove by the gas pump yesterday, and frankly, I couldn't believe, I'm sorry to rub it in, but I couldn't believe how cheap gas actually was.
Oh, come on.
It's $2.55 a gallon down the street. And we were just over $3, $3.30 not that long ago. So really, gas prices have been coming in. But one point that I always hammer on, and I'm going to mention it again, if things are that, out of reach, have you looked at the numbers out of Las Vegas recently? Have you tried to book a hotel room in Las Vegas?
No.
Have you seen what table minimums are in Las Vegas? Like, there's no question about it. People are going out there in droves regardless of the price tag.
Yeah, still people are going to conferences. I don't know. What is it? The optimism that things are going to get better in 2025. So people are doubling down now, not to use a, betting thing, but there's got to be some reason people are optimistic. But for me, I still feel crunches everywhere. I mean, maybe it's just, I don't know. Maybe I just paid attention to it more. I didn't realize it was $3 and now it's like, $2.55. I don't know. It just still feels high. Everything feels like there's a lot. Maybe it's just me. Who knows? No idea. It's crazy. All right. Let's get to the next story. I'm going
to try and find a gas price chart and post it and see if I can share my screen and post it here. I'm going to see what we can find out real quick.
All right.
We're excited. Like here on the Canadian side, we're experiencing declines and excited by it too.
Oh, are you? Okay.
Yes, we're very excited.
Right. Yes. I don't know where I've been. I don't know.
And they say it's going to continue to come down, which is a good thing. I mean, it's
yeah. Well, hopefully. I who knows why that's. Well, is it just
gas prices are sometimes an indicator, though, right? Too of everything else. So it's right.
Yeah. Hopefully, it's just a demand thing. All right. What else is happening in REIT world, David? Before I move on, what else is happening?
Redfin came out with some data talking about home prices up in August, 0.5%. So it looks like we're starting to see a little bit of a turn in the housing markets. Obviously, again, with tomorrow's Fed announcement and the impact on the mortgage rates, I'm sure we're going to see a lot more follow through over the next few weeks. S&P published an article looking at REIT dividend increases. 9 REITs raised their dividends in August. We are about to pretty much go into quiet period for third quarter earnings. So we'll expect to be seeing a lot more activity there on that front. And then for those that follow the world of private REITs, Starwood published their updated NAVs, noticing an NAV decline month over month, still seeing a wave of redemptions. They've tightened the gates compared to a lot of the other non-traded guys, really extra tight. So commercial real estate continues to, frankly, survive and thrive. We've seen a boatload of debt issuances over the past couple of weeks. It's been kind of quiet this week. I think people are on pause for the Fed, but the capital markets are alive and well.
Very cool. Yeah. Well, good. Maybe they all just stopped holding their breath and just started to execute. Hopefully that's what's happening.
By the way, would you like an update on gas prices real quick?
Yeah. Okay. Go for it. Tell me how wrong I am. Go.
All right, so we'll just talk regular. This is in Texas. The average right now is 274.
Okay.
A week ago, it was 283. A month ago, it was 304. And a year ago, it was 344. So, wow. I mean, again, I know we're just talking Texas. I'm not looking nationwide. I'm sure I can get some of that data. But gas prices are on the decline.
Okay. Well, we got to make sure we get it right here. So thank you. I agree. No, I don't know what it is. Maybe it's just overall of everything else. I mean, I think my sentiment is similar to everybody else's. We just want relief somewhere, right? I mean, everybody's kind of getting squeezed. So, but I don't know where all those crazy people are that going to Vegas, because and not like I'm not going to Vegas. I am going to Vegas tomorrow. So, but I am going for Blueprint. So I have to say that out loud. So I will be.
And by the way, there's some great, there's the Sphere, that big new venue that's in Las Vegas. They published their earnings not too long ago, and they kind of talk about you're going for multiple things. There's the concert angle, which I went and saw Fish earlier this year. It's amazing. But they just hosted a UFC event this past week. The NHL draft was there. Obviously, a bunch of concerts, but they also have a daily movie that they're showing like twice a day. And the thing is bringing in, frankly, millions of dollars of revenue. And I think what you need to take a look at least with Vegas, is the fact that all of these venues are offering, call it, more family/kid-friendly entertainment offerings. It's not just the draw to go to the casino or the bars or whatever. Yeah. And so, there is a price point for every customer that's out there. At least I think there is. That, it's really an interesting thing to follow. So again, look at the Sphere earnings report just as something, again, as a separate to the strip hotels, and it'll kind of tell you what type of consumer is going out there.
Isn't it? Didn't I hear it, or I think I heard it exceeded expectations, didn't it?
It's blown away expectations.
Yeah. Well, that's what I heard. Yeah,
$1 million a week from the movies.
Yeah, because you were there last year for RealCom, and they were, I think it was, didn't it launch last year? Or didn't it? Wasn't it?
Yeah, it was early last year, because you had U2 that did the residency, and exactly. The Eagles are about to start their residency here. I mean, it is going to be a draw for many years to come.
Yeah, it's great. To your point, Amy, everybody's traveling and enjoying Vegas.
Yeah.
But it's a family destination. It is no longer, it is a family destination for people who go to conferences, they bring their families. So you're right. It's multi-use.
They're working with Warner Brothers to redo or modernize The Wizard of Oz. Because of the success of the movie that they're running now, they're working with Warner Brothers to basically bring The Wizard of Oz into the Sphere experience. Again, something more to bring the families in. Again, it's going to be a really interesting story to follow going into 25.
Well, didn't they say, from a real estate perspective, they're trying to make the destination a Disney-like kind of thing, so that there's animation and it appeals to many age groups, and it'll for parents who go there for conferences will bring their families. So it's kind of getting back to G-rated, or a mix of ratings, right? It's G-rated,
Well,
where it never used to be. Years ago. So I think they've done well on capitalizing on that, right? Over years.
Yeah, last time I was in Vegas was, I guess it was 2 years ago, and I went down to Fremont Street, which is a whole really cool experience in itself. But there were people pushing babies and strollers down there. Yeah. They were making it a family affair before they were really catering to it. And, it's always a good thing, but people have places to go, right? Especially because Las Vegas draws a lot of people from the West Coast, California, and people like that. It's an easier trip for them to get there. But no, I feel you there for sure. And the only reason I go is because Southwest flies there. It's great. I can hop on Southwest. I love Southwest. So plug Southwest Airlines. But all right, let's go over into, since we have Hector in the house. Welcome, Hector, Mr. Colonis, for being here. And we'll get to some office segments, but why don't you introduce, and everybody, I should do this. I'm like the world's worst host. Maria, David, everybody kind of introduce yourself. Maria, go first. Introduce yourself, girlfriend.
Thank you. Hi, Maria Yellow, Toronto-based, have been in the real estate industry as a CIO and head of IT for 25 plus years, and now working with a couple of startups, and of course the U.S. Property Council and Amy, and enjoying this platform. Thank you, Amy.
You're welcome. And Mr. Auerbach, since you've been chatting, tell everybody how cool you are.
My name's Dave Auerbach. I'm a thorn in the side of Amy and her nuisance. I'm a REIT ETF portfolio manager, as well as the publisher of the Daily REIT Beat newsletter, and a REIT industry consultant.
Great. All right, Mr. Hector, introduce yourself, sir, and we'll get to your story after we talk to Deanie.
Everybody, I'm Hector Colonos. I am based on the East Coast out in Jersey City. I am the co-founder of a company called CRE, where we get operating teams unstuck by connecting all the systems so they can speak to each other. But because I am a geek and like to give myself extra work, I also write a weekly newsletter called This Week in Co-working, where I look over all the trends happening across the industry, both the obvious ones, like what's happening with WeWork and IWG and Yardi right now, but also undercurrent trends with new product types coming into the market.
Great. And Mr. Taylor, introduce yourself, sir.
Glad my speaker's working now.
Yay!
Deanie Taylor, head of strategic relationships for HealthPeak. Been in the healthcare industry for a long time, 40 years or so on the operations side and real estate now for the last 20. Glad to be here, Amy.
All right, great. All right, so the next story, Hector, is for you. Well, before we go there, since you run This Week in Co-working, why don't you go ahead and tell us any stories that you're drawing your eye, and we'll get to the ones I'm thinking about. Go for it.
So there's a lot of rumors or hints about what Yardi's play is with WeWork. I think we're going to see a bit more about that. We are planning, hopefully, to get a fireside chat with both the founder of Yardi and other stakeholders, in which case we'll be able to dive into what it all means. If that's the case, I'll share the link with all of you once we have that booked in. But on the flip side, looking at the other big public company in our industry, IWG, has a bunch of activist investors pushing them now towards relisting in New York and or doing a share buyback, claiming that these shares are severely undervalued given the strong performance. So the two major stories happening in co-working right now. Outside of that, we're seeing huge expansion both of franchise plays, kind of the Marriott play for co-working, where one company owns several brands, from kind of the economy desk solutions all the way through to kind of premium private offices, and then hanging those flags across different buildings. That seems to be a growing trend in the US now, with 3 operators doing a similar strategy play. And outside of that, strong growth in Europe. We're seeing a bunch of networks add additional locations outside of the CBDs as they go after that suburban market.
Very cool. Very cool. So, I think co-working will always be strong. I think it speaks to a certain type of new way of working. And, even though that there are entrenched people that want people to report to the office, and I don't know why. So there's a story that came out that said Amazon is going to make all its employees come into work 5 days a week. They cannot hybrid remote work anymore. I thought that was interesting, and I don't know why. Why would Amazon do that? Does anyone have any explanation there? We thinking?
We have discussed it several times in these calls. There is a culture benefit and a productivity and kind of business benefit bringing people into the office. Why now? Why this company? Why so fast? I'm still reading all the opinions about it. It's been a wash over the last 24 hours since it was announced. Everyone has an opinion, but no one from Amazon has said anything. So once we get more official feedback and we kind of see whether it's going to be similar, like we could have a situation like that at Dell, where Dell kind of mandated that anyone that doesn't come in is not going to be eligible for promotions, won't be eligible for kind of management roles. And a huge swath of their developers said, fine. Some left, some were happy just to keep working remotely, and it kind of blew up in their face. So we're waiting to see what the market shows, at least what the workforce shows, keeping in mind that the cat's already out the bag. Once you've given that autonomy and that freedom to people earning, close to $500,000 a year, getting them to come back into the office when they've now leveled up and can move to other firms is a risky play.
Yeah, I'm not sure. I don't know if it's I don't know what it is. I'm just still amazed by people forcing people to work in the office, but who knows? Go, David.
There's a growing sentiment around bringing people back just to they're finding that there's changes in kind of behavior and that collaboration, and a lot of organizations are doing it, mandating, and then now starting to keep track of those that do. And to Hector's point, basically they're either not getting their bonuses, and that's what I've heard, not getting their bonuses for the year if they don't come in, or they basically are told they have to find employment elsewhere. So they're becoming very strict. But I think it's also a lot of the landlords and owners that are kind of forcing different behaviors in the built environment. So collectively, everyone wants to restore kind of some order. That's what I've heard, back to the work balance versus, where do you work versus where do you play. I'm not suggesting I agree with it. I'm not really sold either way. I think there needs to be a balance. I'm not in that 5-day mandate, but there's different schools of thought.
I think one thing that you're forgetting, especially when it comes to Amazon, remember, they've spent billions of dollars upgrading their properties over the past couple of years, or their new West Coast or East Coast headquarters at National Landing. And so the fact that the company spent all this money to improve its office footprint, they realized we need to have these employees back in the office. And I have the journal article that was in today's paper up, and it's exactly as Hector talked about. The number one reason they cite is culture. It's in-person collaboration. They're sick of Zoom meetings, and AI is also kind of transforming this, where they basically say the AI has gotten rid of the pre-meeting before the pre-meeting to make the decision. And so now when you can come in and be more productive because you've gotten rid of a lot of the hoops and hurdles because of the technology that they're building. Separately, they announced this big deal with Intel yesterday as part of Intel's earnings, as they're working on some kind of AI chip together, Amazon and Intel, that, I'm not surprised really to see Amazon putting this in place.
Yeah. I mean, yeah, for sure. Right. I mean, it is either, I don't know. I mean, I see if it backfires on them. I mean, I think when did they make all those investments? Was it during COVID or post COVID? I mean, was it the COVID kind of investments that they made, like where we would spread people out and do you think, does it say?
National Landing was well before COVID. I mean, you're probably going back to 16, 17 when they started that conversation of where they're going to take their next headquarters. Remember, their main hubs are San Francisco, New York, and DC, or DC-ish. And they're just basically trying to get people to go back towards those hubs.
Well, that makes sense why SHBO then decided to make $1 billion bet on San Francisco office real estate. I just saw that news out, and it came out in Biz Now, where they were talking about how they're making a big play. They think office is going to return to San Francisco, so they're being opportunistic and picking off smaller, or not smaller deals, but picking off cheap deals, half price real estate. So maybe they saw the writing on the wall, or maybe they got a beeline in Amazon. Who knows? But
there's another discussion I saw in an article that was, and I don't know in the States how this goes, but there's employers are becoming increasingly frustrated by employees' demands on remote equipment and the cost of equipping an employee at home. So there's that thing that says, okay, how much am I giving to them at home versus the office? And so they want to kind of do away with a lot of that from an expense perspective. Employee expense, I like, again, in Canada, you can kind of basically negotiate equipment from home, depends if you do. But if you do, there's a tax write-off, and there's also, I guess you consider benefits. But they're becoming frustrated by having to give the employees kind of two sets of.
Oh, I see what you're saying. So they have a set at work and a set at home. Yeah, that makes it interesting for sure. Yeah,
there's an added expense, right? There's an added expense to the employee.
Yes, for sure.
That expense was also added, like tax loopholes that the companies have to jump through based on where the person was employed, where they're being paid, how much of that equipment is reimbursed as part of their salary or taxable. So what they're paying to Verizon, for example, actually becomes part of their wage, which means they now are paying taxes on their internet bill. So there's a lot of headaches around the remote work, especially of that size. So I think a lot of folks are just like, oh, they're only looking at the one element of it and not how it filters through every department at the firm. Obviously, there are solutions out there that exist to help companies with this and help employees navigate this kind of stuff. But they have to weigh the options. Is the pro worth the con? And Dell found out that it was definitely worth keeping their best employees remote. Certain CEOs are working remote right now as well. So I don't think it's any line in the sand. I think it's just a strategic decision based on what they see on their books.
Interesting. Okay. Well, that leads into the next story, which I thought was kind of interesting, and talking about, this one's for Deanie. And it's talking about outpatient medical offices and how that varies, but they're noticing a trend that in mid-sized cities, and I don't know what this is attributes to, but in mid-sized cities, there's a lower vacancy rate, and the standard is like 7 to 8%. But in mid-sized cities, it's around 4. It's like half as far as and the rents, if I'm reading this right, the rents are higher in certain industries. So didn't know what the phenomena was there, if it was just that more people, because of COVID, moved out of the major urban areas and now they're in mid-sized cities and they have to go to the doctor more, or what's kind of happening there, if you knew what the backstory behind this story.
Mid-sized cities may not have hospitals, and so they need office buildings or medical buildings for occupancy, and that drives demand.
It does. It does.
Yeah, the referring hospital might be down in the urban area, but they don't want to build another hospital out in the suburbs or in the mid-sized cities, and so they will put the capability in a outpatient medical building.
Oh, okay, that makes total sense. And your audio sounds like you dropped your phone in the water. I don't know is that for everybody?
Oh, really?
Yeah. Is that for everybody, or is that just for me? It's high squeaking noises and all sorts of.
Let me see if I can fix it.
Oh, wait, that's a little bit better. But my understand from you is that it is because there's no hospitals there. So they do more services because they're providing greater things because of there's a lack of hospital.
It's a less cost piece of real estate not to have to build a hospital. You can build the outpatient medical building, and unless you need very acute care, surgeries, transplants, trauma, you don't need to go to the major hospital. So you can go, and the providers are recognizing that.
Oh, okay. That's very cool. So then there's an opportunity around that, if you're doing a mid-sized city near those, for other types of real estate, right? So we have other types of, obviously all the ancillary things that go around that would be a draw. It's like a change in what draws people to those areas, right? If you have medical care and you have an outpatient, then you might have, I don't know. I've just noticed, say for instance, say it's like Des Moines, Iowa, where they might have a hospital there. They might not have a hospital there, or they do, but they might have smaller services around. I don't know. That was one of the markets that they were talking about. I'm sure Des Moines has a hospital, but
down in the city center, but not in the outlying areas.
Okay. All right. That makes sense. Very cool. Awesome. Very, very cool. So the next couple of topics I want to talk about, and I think this happens to affect, this will affect everyone, but around the whole electrical grid. And this was a story, and this will affect all types of real estate, but in everything, when you talk about data centers, has to do with power, right? That's all I care about is power. And in the last several years alone, and I don't know, I don't understand the gigawatt versus the kilowatt or whatever, but Howard Berry had to get on a plane today, so he couldn't be here, but he wanted to let the big story that's happening, and this affects other pieces of real estate, is that we've had, for all of the industry in the last year, we've had 40 gigawatts of power. And then in 2 states alone, they have requested It was Arizona, and he was telling me the other one have requested, like one state has requested 20 wait, here we go. I got it now. Make sure I get it right. Nevada has requested 20 gigawatts for data centers, and Atlanta has requested 27 gigawatts. So the U.S. data centers combined today only exists of 40 gigawatts today. And 2 states have requested that amount of power to be developed in the next year or 2. So obviously we know this is kind of an issue. We know everything's coming forward, and the White House is creating an AI data center commission and a task force on this whole thing. I wonder where we end up and if we're going to have power for everything else. I don't know, but I think it's going to be an interesting time for us in the next, and it's going to come here in short order. I wonder, so from a medical standpoint and from a hospital standpoint, y'all have critical operations that you have to understand. I mean, is this a concern for the healthcare industry?
Well, typically, is the mic working better now?
Yeah, it's better. It's great. Thanks.
Okay. Typically, hospitals are somewhat favored on the grid in their local markets, so that there is always access to power. If they're really going to advance it and cause shortages during the time and all those kind of things, it will be a problem, because all you've got is the generator backup. But I would say, and this is true in most municipalities, there is a priority of where the power goes to when there is the potential of a shortage. Hospitals, medical facilities are at the top of the list, just like emergency responder locations, things like that. So it could become a problem. I've not read that it is a problem yet. Okay.
So if they're just putting, I just foresee, I mean, I don't know. I mean, if you're requesting that much power, and the grid infrastructure is already kind of suspect, and people know that it's suspect. I mean, even the federal government recognizes it, and it's putting task force together to understand the obviously the electrical infrastructure. It'll be interesting to see. I mean, how are hospitals going to be designed differently? Are they going to, understand, maybe like the data centers have to do their own power generation? Maybe a hospital will have to too. Is there any talk there?
There's not talk about their own, but there is, and we've talked about this, there is a real push for, on the sustainability side, to reduce power usage. The challenge is it's costly, and the time it takes. So if you match it up to what you're talking about in a short order, a couple of years on the data centers, it could be a real problem. But I still say hospitals and medical facilities will be prioritized to remain on the grid when houses and commercial buildings and others go off the grid. So that's where the real problem is going to be seen first, is those that do not get power when the emergency areas get power.
Okay. All right.
So they're going to have to prioritize. Everybody can't get the same amount while they're working on this. And so hospitals and medical facilities already on the grid have a priority. So they will continue to get that. Yeah.
And the sustainability side from it's mostly the equipment inside the hospital, right? The MRI machines and all those that are drawing the most power. Is it that, or is it just the
it is the systems and equipment in the hospital environment.
Yeah. Okay. So the buildings itself, you can make them as sustainable as possible, but you still have to draw, right? You still have the equipment that it needs. Okay. All right. Interesting. Very, very cool. The couple other things that I've seen, and I know, David, you have an ETF around housing, or right? You do. That's one of your things. But you didn't do your ticker symbols, did you, for everybody?
No, the housing index, the ticker is HOMZ, the Hoya Housing 100 ETF, and then our high dividend yield ETF, RIET.
Yeah. So, okay, great. So I noticed that somebody, and I was going to, I like talking multifamily because that's where I came from. And so when there's any big news, like some major players raising money. So Waterton just kind of raised, and this is, I know, private equity, but $2 billion to start chasing after multifamily, which I think is a good sign. It obviously, if people are willing to put money in to go chase that kind of play, I think it's telling. Everybody's kind of, the sentiments there, which is great, which is awesome. I mean, it got to the point in multifamily where even on the luxury development side, the numbers weren't starting to make sense, which I find really, it was always, even the workforce housing and market rate, that's where they were getting crunched, right? Affordable still made sense because you can get subsidized, and luxury still made sense because it was a different type of a tenant. But now that luxury was starting to feel the pinch and it wasn't doing as well, I figured that most people would kind of wait. But now that they're raising money now, I think it's telling, right? Everybody's ready to get back in, hopefully. And
it's also interesting. It's also interesting that it seems like it's frankly a coast to coast phenomena.
Mm-hmm.
Think about the Midwest. A couple years ago, if I told you I had an apartment for sale in Chicago or the northern suburbs of Chicago, you'd be like, pass, not interested. And now there's, multiple groups working on that. Some of the markets in the Midwest are some of the hottest rental markets in the country. And so it doesn't surprise me. Plus, when you look at, frankly, some of the age of the inventory that's out there, and like call it the next generation of renters, if you're 22, 23, do you want to be moving into an apartment property that was built in the 1960s, 1970s, if you're able to buy, rent from the newest property right down the street at the same pricing potentially, or, something very close to it. So I think it is a very interesting story to watch. For a lot of the rental guys, it was like survive to 25, higher for longer, all the, acronyms and stuff we've been hearing over the past few months. But as you said, it's a real telling sign when you are starting to see this much inbound interest to jump in the sector, regardless of where the location is.
Yeah, exactly. They're just ready to jump back in the sector overall, which is a good sign. I mean, well, the housing shortage never went away. Like it didn't. It was still there. I don't know where people lived unless they were like tripling up in rooms or whatever it might be, because there was still a shortage.
Yeah, and that's why single family rental has grown so much, why you're seeing so many different single family rental platforms being built out. Forget the single family rental REITs. You're talking the JP Morgans of the world, the sovereign wealth funds, the big banks, they're all trying to get in on, frankly, this craze as well. We hear about these build to rent to own. You're going to pay the landlord for a few years to basically earn your down payment, and then you could take over ownership on that home. So they're trying to find unique angles. I think what it all boils down to is something we've been hammering on, going back to our Clubhouse days, Amy, is that the affordable product doesn't exist. The guy that's, bringing home $150,000, $200,000 joint income or, less, frankly, can't afford the house that's being delivered by the home builders today. Forget the fact that mortgage rates are where they're at until these home builders deliver a product that's, instead of $700,000, it's only $300,000 or $400,000. We're going to be upside down when it comes to supply and demand. In my neighborhood, I've noticed a bunch of for sale signs. And granted, things were crazy during COVID where stuff wasn't even being listed on market. It was going away in a couple of days, if even that. And it'll be interesting to see how quickly does this flip now versus just a year or two ago.
Yeah, no, I agree. I'm hoping it comes back. I mean, that's where I hang. I think it's, and they're investing in lots of different things too, as far as, I mean, we get back to this whole energy topic. A friend of mine owns a clean energy financing company, and he works with multifamily owners to, put solar, do different things on their properties. And apparently somebody else took notice because there's an article in Biz Now talking about Carlisle investing in clean energy commercial financing with a stake at Northbridge. So this might be another way to invest in real estate arbitrarily. I mean, or like as a side, because they're financing in the improvements of all these clean energy, and probably because of ESG mandates, or not ESG mandates, but people might be just looking for other ways to save cash, even without the ESG mandates. But I think this will become a big business in the next several years as far as financing the, outside of CPACE, because CPACE is not in every market, all these clean energy improvements. But I'm not sure. I think we'll see. I believe it. I believe it'll happen. And I'm hoping nuclear comes to pass for sure. I think that people will eventually forget about Chernobyl. Maybe not. Maybe Chernobyl's burned into everybody's brains, but at some point people will go back to nuclear and understand. And they're calling it green now, which I find interesting. But green energy for sure. But I'm hoping that more and more clean energy gets, and the only way you can do it, because it's very cost prohibitive, is to have someone finance it for sure. Well, Deanie, any other stories in your world that you take note in the healthcare world that you like to talk about?
There's more product, more assets coming to the market, which we're all watching on the outpatient medical side. And the quality is going up, what's coming to the market. So we'll see what happens. That could be an indication of maybe some movement in the cap rates, but it's a little early.
Yeah, it is a little early for sure. All right, we're at the part of our show. We're almost there. So let's do our outros. David, how about you?
What do you think I'm going to say, Amy?
I'm going to say, you're going to say buy REITs.
Buy REITs.
Yes, I have 2 REIT people on the line, and that's it. Buy REITs and buy healthcare REITs.
There you go.
There you go. Well, thank you guys for coming on the show today. It's been fabulous as always. And we will catch you next time.
Thanks, Amy. Bye, Deanie. Good seeing you.
Bye. Bye.
So this has been the Commercial Real Estate News Morning Show. Thank you for watching. This is a show of the U.S. PropTech Council. And the U.S. PropTech Council is sponsored by Lerner and Associates. And Lerner Associates is was founded by Ben Lerner, who's one of the OGs in PropTech. And he helps the industry move forward because he helps companies scale and grow through mergers and acquisitions. Thank you so much for coming on the show today. And we will see you next week. Have a good one, y'all.